at Streetwise Economics. With me here, I have my colleague, our trusted money coach, Blooming Umorin. Blooming Umorin also has a thriving YouTube channel and a growing Facebook and social media presence. Welcome, my friend.
Thank you, buddy. Excited to be here again.
Yeah, and those who don't know me, my name is Isaac Jonas, and we like to talk about money, what's going in the market. So let's go right in the market and see what's happening. So right now we can see what's really going on in the market. These stocks are actually down, as you can see here, that are on my screen share. And you can see that most stocks, like the equities market, like broadly, is down, right? And the S&P 500 is 1.37% down. And also the DAX is also, that is the German stock market, is actually trading 12%, 0.12% down. But in terms of the currencies, there's also volatility there. Now, Coach Blooming, do you want to comment on what's really going on here? And on the screen, I also have Palantir and Nvidia, which are the two stocks that we are going to do a deeper analysis, because these stocks, they are very interesting plays on AI. And yet, uh, I saw that this week, Palantir has really dropped more than 10%, and Nvidia has gone up after dropping to almost 116 just, I think, about 3 weeks ago. So, Coach, what's your comment on that?
Yeah, whatever we're seeing in the market today is just telling us that traders and some weak investors can be very rational in the short term. For
Yes,
example, Palantir went as high as I think 125 or $126 just this week.
yes, yes.
And just yesterday it dipped under $100.
You can see
So
this red line here,
yeah, so
and
it's
it
really
dropped like this.
it's really insane what is going on. But I really like the fact that Palantir is taking a breather because it has not been healthy. Just running from, I think, even the start of January, it was still
Yes,
around $69. So literally
yes.
almost doubled in this year already. If you
It was
started
going
buying
up
in the
almost every
60s,
day.
yeah. So again, and sometimes when a stock is just rallying or just going up like that, a lot of new investors or amateur investors, they just go into the stock thinking that, oh, okay, this is going to keep going up. But
Going
as a
yellow.
student of the market, we've seen this play out for several stocks, Nvidia, Tesla, MicroStrategy. I mean, any stock whatsoever, you've seen that anytime a stock is just rallying like this, to me, it's just a cue for me to take cover and don't go in and let it have a pullback. So whether
Yes.
it's Nvidia or Palantir or even Tesla, again, it's just natural for all of this dips to happen. So that's just my take on that. And apart from that, like we started this year very strong, and if we're having a February that is a little bit weak for this week, it's still good. And if you have some cash, I will be buying, but I'm not buying. Personally, I'm not buying. But
Yeah.
I'm just saying that for somebody that doesn't have a position, maybe you want to consider. But and I also have to put the disclaimer: I own some Nvidia, Palantir, Tesla. So it won't be as if maybe I'm just promoting my own coins or my own stocks. But yeah, but it's very
Yeah.
healthy that we're having a pullback.
And that's a very important disclaimer there, that our conversations here are meant for educational purposes, like we have said in all the
We're
videos
just
that we
having
share here.
fun. We're
Yes,
just having fun. Two friends
yes.
talking.
And what's really interesting, and that's something that, you and I, we have repeatedly discussed in our private conversations, to say, look, this seems so obvious.
Yes.
Oh, what is happening in the market? You see right now, Nvidia, it went to 116. Now, this week, it went as high as 143, right?
Yep.
Only now to be trading at this level, 136, right?
Yep.
So what's happening right now is, like, if you just bought at 116 and you just chilled, you would be
Yes.
up. But the
Yes.
point is, it's very, very important to understand the fundamentals of the stocks that you get in. And
That
also
is true.
the reason why you are getting in, are you getting in for the long term? Is it a swing trade or is it a day trade? So for me, I do both. Like today, I added on my exchange traded funds that track the S&P 500. I just bought a few shares, because my capital is not a lot, right? But it's important for us. And even if I buy 5 shares every time, it pulls back. Over the long term, I shared in the newsletter that I sent out to our readers today. You probably have seen that, Coach Blooming. I was looking at one of our family portfolio. The past 3 years, we were able to compound our portfolio by 28% versus an average of 11% for the S&P 500 over the same period. So that
That
means
is amazing.
that's amazing, right? And we are
Yes.
basically, yes. So if I can repeat that, if I can have 5, 10 years of getting those kind of returns, my goal
Hmm.
is threefold: to beat the S&P 500, two, to grow and protect our capital
Yes.
very slowly and steadily. And I do so
Yeah.
by trading and holding some core positions for the long term that I believe to be undervalued. And I repeat
Right.
that process. So that's really the goal. So a lot of people, they can't even beat the S&P 500. And even for me to then say, okay, I want to see that thesis play out. If I'm able to do that 5 years, 10 years, and even after that, I should not be complacent, because
Yes.
still you can then do one stupid thing and blow the account.
Bloody yes. And I think you mentioned something important. If you can stop sharing, that would be good too. Like you
Fantastic.
mentioned something important about knowing the fundamentals of a stock. That when
Yes.
something fundamentally changes about a company, it's important for you to reassess your investment thesis. I remember when the DeepSeek situation happened and a lot of people started selling and they were
Mhm.
panicking. And I'm like, did you read this thing to really understand that they are going to be needing NVIDIA's GPUs? Literally.
Yes.
So, like, if they're going to be needing NVIDIA's GPU, I don't think this is a threat to NVIDIA. This is more of a threat to even open AI. But again, as a long-term investor or even as a student of the market, it's always very important to evaluate the investment thesis. Why am I in this stock? Why am I investing in this company? Do I understand the products? Do I understand the place of this
Yeah.
product or this company in the equities
Bigger
market, right?
scheme. Yeah.
Yeah, it's very important because when you don't understand it, and something just
Mhm.
as I know, DeepSeek is major, right? It made people to question the investment thesis. But
Yeah,
if
the
you just
billions in
study the
capex, in capital
yes,
expenditure for these US AI companies.
yeah, so like if you just take some time to just understand the investment thesis and the fundamentals of the business, when a news comes out, you're able to decipher and separate the news from the myths
Yes.
because that is what is going to give you the winning strategy in investing. A lot of people just follow the herd mentality. Oh, people are selling,
Mhm.
oh, DeepSeek, they were able to do this for 5 million, 10 million. I mean, whoever, I mean, whatever number they are calling, but it's just important to know that the AI infrastructure it has not even started. The AI,
Yeah.
it has not even started. We're just at the beginning, and this is going to go on for several years, if not even multi-decades.
Yeah.
Again, very important to understand the investment thesis of whatever company you're investing in, so that in the long run, when something fundamentally changes about the business, you're able to make an informed decision. Most people don't take the time to understand the investment thesis and they rely on someone. And I always like to say, don't even believe what I'm saying. Don't believe what Isaac is saying.
Without
Do
questioning.
your own research. Yeah, do your research because why would you believe somebody random on the internet? No, don't believe us, but we're only sharing that, hey, this is what I'm doing. This is what we're looking at. This is how we're picking our own stocks, and that's it. So it's just very interesting when you see some of these things play out in the market and you're like, oh my goodness. Yeah, I mean, Nvidia
You
at
know,
was it number
you
116?
know,
I'll just be buying.
I'm fascinated because yesterday I trade, right? For now, that's what I do. And I was just looking, questioning, just having this fun, like this soliloquy, just questioning myself and just having fun to say, look, I know fundamental when I'm trading. Like I had this position on the VIX ETF that I trade, and I think the position was down about maybe $50 on one of the accounts and stuff. And I'm like, I know, I believe that here this is a very good level to buy. And guess what? Today the VIX is up. And even yesterday, as I was doing that, it spiked and I cashed out. So I was just laughing to myself to say, look, if you don't understand what you are doing, in that case, I would have said, oh, let me realize this loss just because you
Yeah.
see this. But it's very, very important before you buy any stock, whether I tell you ask, understand, and
Yeah.
because there are a lot of people sometimes who may even have short positions and then they say something and there could be a hit piece. And even interestingly for us as long-term investors, these short-term volatilities are good for opportunities for us to buy more shares.
Yes.
So for me, I like it.
Yes.
But I really have to do research. There's a position of a stock that I opened a position for yesterday. I'm not going to disclose that, but I've been trading this stock for some time. It went down by about 28% yesterday, right? And today is even lower. I'm going to maybe add a little bit more, but I've done research ahead of time. They released their earnings, and what I then realized was that there are some changes that they are making as a business, right? Between Canada and the US, and probably people just anticipated that and the tariffs and all these other macroeconomic headwinds. Again, if I'm looking at 4, 5, 6 years, again, I cannot predict the future, but if the bottom line is the net profit is growing, the free cash
Mm-hmm.
flows are increasing. They are reducing their debt level by 500 million. That's their hope, their plan this year. So all the
Right.
things that I look at, they are
You
good.
know,
They are good.
yes.
So I'm going to be adding more for that position, right? But right now it's going down. Today it was down even more, but I'm going to add more. Again, investing comes with risks, but if you flesh out the noise from the information from the details, they always say the
Right.
devil
Is
is in the details, right? Now, before we even move on to the economic data, I know we were talking about having other income streams through writing covered course, and that's something that you started, my friend.
very,
Congratulations on that. Do you wanna just share a little
yeah.
bit more about that as well?
So before I even delve into what covered calls are, I think one
Yes.
of the things that I want to emphasize is the need to take some time to just step back and just see. Sometimes we're in a hurry and we're just in a haste to either you're going to work or you're going for business or I mean we have so many things or family that is just that needs our attention. But sometimes when we just take the time to just sit and marinate on what we have, sometimes you might not even realize that you're sitting on gold, but because you've not taken the time to just sit and relax and evaluate what you have. And that is my own thesis. I've been investing for since 2020, right? It's
Ye-
almost 5 years now.
Yeah.
And the fact that
Sorry to interject.
I've
And
been, yes,
sorry to interject. And how has been the return on average? Not
see,
specific details, like you've been getting
again, I
very good returns.
I like to look at just the overall big picture. At
Yes,
least I can say that, okay, what I've put in and what the overall portfolio is now is more than doubled, is more than 3x already.
exactly.
And that is just being a passive investor.
Yes.
And that's just one stream. And I think micro strategy, or should I just say strategy? Those are
Mhm.
my long-term thesis. Maybe for micro strategy will be more medium because I know when I'm going to exit my position in micro
Yes.
strategy. I think when Bitcoin reaches 180K or 200K, that's my cue to exit my position in MSTR. But
Yeah.
notwithstanding, the second way that I also make money in the market is by selling covered calls. What are covered calls? So this is just
Yes.
me selling an option on a position that I already own. So what
100
do I mean?
shares of, at least.
Yes. So for example, now if I have a company ABC
Mhm.
and I own at least 100 shares, for you to write covered calls, you need to have at least 100 shares. So I have 100 shares of this company ABC,
Per
and
unit,
I'm
yeah.
saying that, okay, let's assume that the this company ABC is now selling at $100, meaning that the price of the stock is $100. Now I'm gonna say, okay, maybe in the next 3 weeks or 1 month, this stock is gonna be at $120 or $130. And I write a cover call. The moment I sell the option, I'm gonna
Mhm.
get a premium, meaning that I'm gonna get money deposited into my brokerage account because I am saying this stock ABC that is trading at $100 now is
Yeah,
gonna be at 120 or 130.
yeah.
Again, this is not a risky bet because number one, I'm using a security or a stock that I already own. So
Yes.
that's the covered part of what is called selling covered calls. And
Maybe
number
can I
two,
add something?
yes,
Yeah.
and number two, like just before you jump in, and number two, let's assume that I am saying that this stock is going to go to 120, and before the expiration date, it gets to 120. I can roll it forward again and get a
And
premium.
repeat the
That is
process.
just a way to just keep generating monthly income on the same security that I plan on holding for the next 5, 10, 15, 20 years. Again, money is a game, and those that understand how to play this game,
They win.
goodness, it's just really, really amazing. It's an amazing sport, and we're winning. So yeah, go ahead, Coach Isaac. So
Yeah, no problem. So I wanted to just jump in. You explained it very fantastically, right? So what is interesting in that case is you win both cases. For example, let's say you have a stock
yes,
ABC that you said, and your average is, let's say, $100, right? So if the stock drops to, let's say you write a covered call for 3 weeks. So let's say within that 3 weeks by close of day, it is now $90, and you had been paid $300 as premium, it means you will keep that premium, right?
yes,
Now, if let's say if the stock now goes to 140, right? What it means is you still win because you will still get from, let's say,
love
$90
it.
your basis to 120. Let's say that was the at
Strike
strike
price.
price, right?
Yeah.
Plus the 350, the 300 that you
Mm-hmm.
got, right? So slightly, but you have just given up a little bit of the upside. If it goes above the
Yep.
123, let's say, for example, $123, if you say 120 plus the 300. So in that case, you are winning both cases. So you
Right
open the
away.
position,
Yeah.
right, by selling a covered an option contract, and
Yes.
one contract
Yes.
is equivalent to 100 units of the shares for that stock, and you open a position by selling a the contract, and then you close the position by buying back the shares. So in other words, you still get to keep your
You still
shares,
win. Yes.
get paid the premium. So if you can do that, we were looking at this particular stock X that we're looking at, right? And it gives you like it's 18% return if you are able to consistently
Good.
like collect the premium. Again,
Right.
the issue is that it's very, very important to understand the stock that you are playing with and have the share.
Yep.
And then if you can make, let's say, 1,000 or 2,000 every month, that's fantastic. And
And
you have to
and
understand the technicals as well, because if you pick a very aggressive strike price,
yeah,
then you are more
yeah.
likely to lose the shares, right? But you
Yes.
still get paid for that if you have a good average.
Yes. And the beautiful thing about selling covered calls is that this is so passive.
Yeah.
It's not something that you're just actively doing. It's just okay, this is gonna be my strike price. And okay, what if this reaches my strike price? What is my strategy? Do I want to sell or do I want to roll this forward? Again, these are just simple. I call it simple because again, I've taken the time to really understand what covered calls are. And the
Yeah.
reason why I'm saying this is that it's so important to educate ourselves on the
Yes.
strategies that we are taking. A lot of people don't take the time to understand these investment strategies, but The moment you start sitting down and you just, I want to understand this thing, and you dedicate some time to it, you're gonna be like, "What? Why haven't I been doing this for the past 4, 5 years now?" So again, the fact that it's just passive, the fact that this is a stock that I want to own for the next 5, 10, 15, 20 years, God helping, is a no-brainer. And if peradventure maybe it reaches my strike price and my stock get called
You still
away,
have already made a lot of
I
money already.
made a lot of money. I've
3x.
just literally 3x, just again passive. Just put your money, let the market do its thing. Again, it's so hard for some people to just wrap their minds around that. When the invest, like the stock market is one of the best wealth generating machine. And if you can just put your money and you understand what you're doing, you're gonna be fine.
That's
You're gonna be fine.
fantastic. And I think for me, one thing that I love and what I'm learning, because now I'm an entrepreneur pretty much. I day trade in the markets, and I from time to time I sell some of our holdings to kind of like fund our lifestyle. And I have to find ways of getting income. Cash flows are important. So if I can
Yes,
write covered calls, for me, that's something that I'm now moving towards, to say I want to explore and at least now buy some shares with the uh, strategy to then kind of like write covered calls. Another
yes,
way that I have been reading a lot about is to look at some exchange traded funds that actually pay high dividends, because using
yes,
covered calls in Canada and the US, they are there. And what they do is they, let's say, write covered calls on the money, right? Let's say for
yes,
maybe 30% of the portfolio. So in other words,
yeah,
so that premium from the 30% of the position, core position, they pay
yeah,
17 or 18% per month,
yes.
right? I think
Come
it's per
on,
year. It's per year, right?
yeah,
But still,
yeah,
that means a 12% return in that regard, right? That you get, and it
right,
lowers your cost basis for that particular stock. And even better if there is capital appreciation in the stock. So if
yes.
it goes by 20 up by 20%, and you've already been paid another 20%, in real sense, you have made
So, ma-
40%
yes,
at least. So it's interesting, but I must say though, Coach Blooming and I, we spend dedicated amount of time researching, understanding things. Like even yesterday, I was analyzing these stocks and stuff like that. And today I didn't trade because um, from my analysis, I was like, I think maybe let me just pause for a little bit. Plus, I had already made a decent amount for this week from my trading. So that's the important thing, to say you have to educate yourself.
yeah,
And if you then don't know how to do that, that's why Coach Blooming and I, we are here. If you want to learn how to invest, how to trade in the financial markets profitably, then you can uh, come to us, or you can always go to a financial advisor or anyone. But the key thing is you have to educate yourself,
educate
always
yourself.
ask questions, because there are a lot of people who get scammed because they just, sometimes it's lack of knowledge. But I think
Mm.
it's important to always have an interest in the understanding how your money is, what's
It's
going
what,
on in your money.
yes.
Now, do you have anything that you wanted to comment on before we go on the economic data? Because today we had some exciting data points, and
Mhm.
next week it seems like it's a very packed week, and I anticipate that there might be a lot more volatility.
Yeah, I have nothing to say, but with this new administration,
Yes.
I think we should expect volatility every now and then. It's a given.
And
And
volatility is good. You know what,
but
as a
it's good.
trader,
Yes,
I
it's
make
good.
money. The market goes up and down in leaps and bounds, because
Yes.
if I am right in my trades, then I make money. So let me share with you some charts, so that at least we can see what's going on in terms of the economic data.
Oh yeah, we.
Yeah. So one thing that I actually, the market moves because of different reasons. So I like to use investing.com. I'm not necessarily promoting them, but I like their charts. And I filter this by 3 levels. And I want to see the data points that have high volatility. You can see these 3 ticks here. And these are the things that I pay attention to. So you can see that this week, these were the data points. And each time this data was dropped, because the market has analysts, they forecast that it's going to come at this point, and the actual, what actually gets published, right? And then they also usually compare it from the previous. And usually if there's a variance, the market tends to react to this. Sometimes it's positive or negative. So that's another reason what causes the market to move. So you can see this week the initial job claims jumped. It means more people are out of work, 5,000 more people are out of 4,000 people. In this case, it's 5,000 people more compared to last time they recorded last week, right? So
Mm-hmm.
that caused the market to drop further. The Philadelphia Fed Manufacturing Index, basically, if any number that is above zero, it means the manufacturing sector actually expanded in this case, but it dropped quite significantly from 44.3, which was the previous month. Even though it contracted, but it's still, it, in other words, it's still above the baseline of what it was, right, when it was at this point. So these are the things that are interesting. And today, the S&P Global Manufacturing PMI, basically any reading above 50.0, it means in this case, the manufacturing sector in the US, it expanded, right? In this case, it expanded, but the services sector, it contracted. Why is this important? Because now the Fed usually makes decision based on this information. For example, there's going to be the GDP, again, initial jobless claims, but this is very interesting for next week, right? The core PC, uh, PCE, in other words, because it gauges how prices are increasing, right? So they do an interval. Let's say if it's 2 weeks or every month or 1 year, you then see to say, is inflation increasing? Why is inflation an issue? It means the real value purchasing power of your money is going to go down if it goes up. And now the Fed has the dual mandate to keep the the month supply, the inflation in control at 2% target in the US. And also unemployment, it can never be 100% because there's always frictional employment. Some people, they are just too old to work. Some people are young. So usually they target, I think, 96%. That's what is termed, I think, full employment. So if unemployment in that case is, let's say, 4% and inflation is 2%, there is that sweet spot of the balance. Now, each time it's in disequilibrium, it means either investors, traders have to price in based on the macroeconomics to say if the Fed is going to increase interest rates, it's going to increase the
Mm-hmm.
cost of borrowing for businesses. So that increases the cost. Or if the price of crude or whatever factor or tariffs cause prices, potentially the cost of borrowing or whatever the cost to increase, usually the equities market respond, the bond markets respond. So that's what we learn in economics. But in simple terms, I'm bringing this to you, just sharing my experience in this. The key thing is to look at the longer time horizon and try to look at patterns, even though the past does not necessarily guarantee the future, right? But at least for me, I like to look at that to say, okay, where do we think we are going? But if I am then right in my judgment, because if I have that macroeconomic picture to say, I think the equities market are going to go up by the end of the year or in the next 2 years. And as they are going down, if I then start buying and accumulating shares like we are doing, and in those 2 years, if it goes up by 20, 30, 40%, I will have made my money. Similarly, or conversely, if it continues to go down, it means I will have
Mm-hmm.
lost money. So that's why it's good to have a balance of that, or to at least reach out to experts. In other words, people who understand these frameworks. And more importantly, I've learned quite a lot, and I send out the letter to our readers today at www.streetwiseeconomics. If you want to be part of that, one of the things that I was just sharing with our readers is to say, look, these are the main lessons that I've learned by investing in the markets. And I have some results to prove, not to brag, or I'm sure there are quite a lot of people who have beaten my return. For me, I'm doing it for myself. In that particular
Right.
portfolio, if I'm making 28% compounded per year, it means how long will I take to double if I'm able to maintain that? You say 72 divided by 28, right?
Yeah.
It's less than 3 years.
Yeah.
So if you have 100,000, every 3 years, if you double it, goes to 200,000. At the other 3 years, it goes to
Yeah. I mean,
four
the
hundred,
name of numbers
800. Exponential
compounding,
growth function.
it just it goes crazy, it goes wild. You're like, what
That's
is
the
going
thing.
on here? Yeah. But I think you did mention something very important, especially when we say that we expect the market to go up, but it's also important to know that despite the fact that we're bullish on the equities market, it's also very essential to know that we're going to have dips here and there. We're going to have some dips here and there. And for those that are in the market, those dips are just great buying opportunities.
Mhm.
As I always say that I'm very bullish about 2025. I'm very optimistic about what the market is going to give us, either in the equities market or in crypto. Crypto this week has been has been in the red, has been red literally. And I think today I was just listening to what was going on in crypto, and I think I read about Bybit, which is a crypto exchange, being hacked, and I think about $1.5 billion in ETH was being stolen. But irrespective of that, as important as that news is, in the grand scheme of things, I truly, truly still believe that crypto equities were going to be handsomely rewarded this 2025. Even though, yes, we're having some major dips both in both markets, but as a long-term investor, we stay invested. We take advantage of these major dips if you have the cash. And don't forget, this is no investment or financial advice. We're just sharing with you what we're doing or what we believe personally about the market. But yeah, we're going to be handsomely rewarded
And
and
what we are
continue
learning along the way.
keep learning, keep breaking things, keep learning, keep investing, keep screwing things up when it comes to money. And you're like, oh goodness, I made this mistake. And you learn and you grow from there. And that's the beauty of investing. That you start out with a little capital, you test it. And once you have the confidence, because again, I always like to say that investing is just 10% numbers, 90% your emotions, how you're able to manage your emotions when you're investing. That is very, very important. And I think that goes back to the psychology of money too. That,
Mm.
hey, if you want to stay long in this market, you got to understand what you're doing and don't chase the fast gain. Fast gain.
Oh,
I just want to
yes. I
double
stay
and
away
triple
from
and
those.
quadruple my money within the shortest time. So, yeah, but it's been very, very interesting. And as always, may the market be in our favor. So, over to you, coach.
Fantastic. Thank you so much. And like we have said, put some comments, like, subscribe to our respective channel. And Coach Blooming also has a channel that is dedicated to sharing this knowledge and also a very increasing social media presence. Until next time, take care, and we will talk to you in the next episode. Bye bye for now.